Hello guys, today in this video we try to see the 6 facts about trading probabilities. You have heard a lot about probabilities. This has nothing to do with mathematics or algorithm or what the people say and try to influence people that when you use math algorithm you can make money easily, which is not the case. Okay, because what moves the market is people. You can't just think that the people will do this and they will not do this, because the people are foolish. Okay, they see the stock is going down and there are bad news and a lot of stuff, and you find this guy is buying heavily. Okay, and then we have a gap down and then he loses everything. So the probabilities I'm trying to speak about are 6 facts. We will see them one by one, and please, if you have questions, please ask in the comment section, and I will be getting to these comments and I will answer them. Okay, so we can begin with the first one. The first one is succession of winners and losers. Okay, this is a fact in the market about your trading. It doesn't mean that when you lose 2 times or 3 stocks or 4 or 5 or 6 or 7 that you will never see a winner. You will see winners, you will see losers, but how they come you will never know, because this depends on you in the market. Let's say an industry is doing so good and the stocks are going good in that industry. You bought 1 stock or 2 from there and you see your stocks going good. Then you buy your other stocks from another industry, another sector where there are bad news. The mutual funds are selling off. Okay, so there is a trouble there and you buy there and then you lose trades. So you can't be everywhere in the market. This is the problem. Okay, because some stocks are running, some stocks are going down, some stocks are trading into a range, some stocks are slipping, some stocks they don't move that much, some stocks are moving so fast. Okay, in 1 month or 2 they can go 200%, 300%, 400%. These, I'm speaking about smaller stocks and bigger stocks also. Okay, so understand that when you trade you have losers, because not any stock that you buy with whatever strategy will be a winner. This you should understand, and don't confuse yourself and don't let other people telling you that they can have 100%. I have seen one guy who is commenting and he says that there is in India someone who knows the future. I say, okay, if he knows the future, that is too funny. Okay, he controls all the minds of the people, and he is the god of stock market. You know, people, they believe even in strange things. They believe because they want to believe that there is something which is true for the market, and they understand that the market doesn't give you that, doesn't give you the right to be right every time you buy a stock. Now here I'm speaking about all the people who are doing day trading and swing trading like us, okay, or short-term trading, what we call swing trading. This is what we mean. So understand that when you do some trades and they are bad trades, it means you exit, you use a stop loss and you exit. This first you try to see, like this 2 months the market is so troubled. So either you check if you find an industry or you find something that is going good, okay, or try to stop, not to stop, but try to reduce your trading until you see something good in the market. And understand that, for example, today, the market is up or down. I'm speaking about general indexes. Okay? Go to stocks, you will never find them the same. Some stocks are going up, some stocks are going down. So if you are you bought a stock that it is going down, you exit with a stop loss. Okay? And you have a loser. Someone else is in another stock and is going up and he make money. So you see, so this idea of winners and losers is always in the market. Don't try to force yourself or to go to some gurus online and they teach you a way not to be a loser in terms of winners and losers. Okay? Or they claim that they have 95% or 100% or whatever. You are just wasting your time, and this is psychological thing all the people do, and they won't because they are beginner. They don't understand how the market works. Okay? This is a real problem. So let's go right now to number 2. Okay? So number 2 is a trend's length. Okay? So fact number 2 in probabilities is trend's length, the trend. Now we as swing traders or short-term traders, how do we make money from the market is when there is a trend in the stock. It means you wait a few days, few weeks, few months, 2 months, 6 months, 7 months, 8 months, but you don't go and you do what we call a position trading, which is 1 year, 2 years, or 3 years, okay? Or investing. We are not doing that, okay? We are staying in the market. It gives us money, we stay. If not, we exit. Now, you will never know a stock where it can go. This is a fact, okay? Some people, they do what we call a price target. Here I'm speaking about short-term traders. Oh, he said, because when I do my live session, someone told me that one guy who's teaching them, okay, they say, use a price target, when it's 10%, exit. How do you know that the stock, this stock, goes 10% only? What if it goes 200%, 300%? Are you going to leave all that money to the market and you just take 10%? If right now, okay, let's say the government asks you how much money you need in the year. If you just have number like $1 million, just you have this number in your head, because a lot of people, like the majority of the people, when you say $1 million, oh, $1 million, too much. It is not too much, because what do you do with the $1 million? Okay, so the idea is the trend itself. It could be few days, few weeks, or few months. So don't predict how much time you should stay. You bought a stock, it's going up. Stay until you have signs that this stock will not. Now these techniques of how to know, I put it in training level 7, how to follow the trend. These techniques are just simple ways, simple techniques. I don't use indicators, okay? Indicators and the other stuff, I don't use it, because the indicators are using calculations that understand that the people, when they buy, they don't care about this calculation, so these calculations will be nothing. But there are some ways to know if the stock can continue, yes or no. And even if you do a mistake, for example, you put an exit plan when you see that the stock is not going anymore and there are some signs that shows you, let's say you exit. Let's say you see after a few days that the stock continues the trend. Okay, you buy it. What's the problem? Understand that it is not the end of life. You should adapt yourself to what the stocks are doing. Okay? So this is not it's not a matter of buy and then sell and then bye for the stock. No. You want money, yes or no? Okay? If you say, yes, I want money, okay, try to follow the trend until it finishes. Even if you do a mistake, let's say the stock is going up for 1 month. You are making money. You change your stop loss, which is called exit point when you are taking profits. Let's say you take the profits. You think that the stock is going down. Okay, you have some techniques or whatever, and then after a few days you see that stock continues the trend. It means the trend is still there. Are you going to just leave the stock and go to find another one, or are you going to buy? Now let's say you buy again and the continue goes up. Now if after a few days it will go back and it didn't do nothing and it goes back, and you begin to try to have this trade as a seconded trade in the same stock. You have done the first trade, which is successful. You take some money, 10%, 20, 30, 40, 50, 100%, and then you see stock is not doing well, is going down. You exit, and then you find that the stock is still continues to go up. You buy it again as a new trade. If it continues, you will be making more and more money. Okay? I have seen in my life in my experience of trading, some stocks that, let's say I exit a stock at whatever percentage, and then after a few days the stock continue, I buy it again. They continue to make more percentage. Okay? And take this idea from your mind that when you exit, you lose. You don't. This idea is false. When you exit, it is just you see something wrong with the stock, and be careful, because some stocks, they can go 100% up and they can go down 100%. If you don't know some techniques to have an opinion on your stock, okay, you will end up giving all the profits because you don't know how to deal with this stock. So there are ways to do business. It means you should learn. Either you learn from me or you learn from someone else. It's not a problem. It means just learn. Now, for as I say, this people, they say 10% or whatever is target price is a mistake. You can do it in day trading. Also, day trading, sometimes the stock is doing so good, either up or down. Okay, so you should have some signs, some techniques to use in order to know if the stock is still going up or it is still going down, and you can make more money. This you get it by experience, or you get it by techniques, well-known techniques that you can use. Okay, understand that some stocks stays 6 months, 8 months. I have seen the stock 1.5 years, but it is too big, like this 1.5 years, because you enter to a position sizing or what we call investing. And this, if you know some, let's say some company fundamentals, but here we are not speaking about that. Okay, so let's go to number 3. Okay. So number 3 is winners profits. Okay, some people try to see what is this winner profits. So here is the problem, that a lot of people are thinking that someone tells me, and he tried to argue with me this thing. You say, he said to me that there are websites, you give them all your trades, and they give you the percentage of winners, and the percentage of profit, and the percentage of losses, and the percentage, and the percentage. Okay. You know, a software understands one thing, because it is using math. It doesn't use, it has no intelligence. Okay, it has no intelligence. It's not a human that gives you the fact. Okay, it's not a human. So is, for example, a winner, is it $1, for example? It means, is it a dollar? When, for example, you buy a stock, you sell a stock, but you find that the profit is $1. After commission, it means the stock goes up, goes down, and then you sell it, but you see $1. Is this a winner? In terms of websites that the people are use, it is a winner. That's why some people, they say, oh, I have 65%, I have 75% winners, but this guy is not making money at all. With these winners at $1, you can do it. You can do it right now. You can take when there is a good, for example, a good day in the whole market. Try to go and buy stocks. You buy here one, it gives you $5 profit, $10, $20, and you will have a lot of winners. Okay? But in real, have you made money? No. $1 is not money. You can say it is a winner. And you ask me, for example, is there a percentage? No, there is no percentage. A winner, it is a winner. You should see some money. But if you see $1, $10, $20, okay, depending on how much you put, but I'm speaking about whatever. I told you before that even if you have small account, you put, let's say you put $2,000 or let's say $3,000 in a stock, that it is a small stock, $5, $7, $10, whatever. If you don't see 1,000, 2,000, it's little. Why? Because we are following trends. We are not doing day trading or a week trade. We are not doing that. Okay? So understand the profits, as I told you, in some websites or some people, when they speak about winners, this is what they think about. They think about the number. They don't think about the real money. Okay? If I say, for example, I have a winner, just an example, okay? $1,500. This is a winner. You put 3,000 or 4,000 or 2,000, whatever you put, and then you have 1,500. This is money because the trend, and you make money. This is a winner for you. But you compare it with another trade that you made. Let's say you have $10 profit. You see it, it's $10. You bought it with this price. You deduct 2 commissions, and then you sell, and then you see how much you sell, and then you find your profit is $10. Is $10 something that you can speak about and you say it's a winner? It is not. But in websites, those websites that are a lot of websites, someone told me that these websites exist, and they give you how good you are. You say, oh, you are doing 65% winners. Okay, that's good. I say you are making a lot of thousands of dollars in 1 month or 2. But when you see how much he made nothing. he is nearly like break even. Okay, now another thing that I want to mention is the winner's profits. Don't expect the same money in the same in each trade. Okay, there are some very good trades, very good winners. Some are what we call medium. Some they break even because they go just a little bit up and they go down, and it happens a lot. Okay, here I'm speaking only about winners. I'm not speaking about losers. Okay, so in your life of trading, you will see excellent trades, you will see medium trades, and you will see small trades, and you will see break even, and all these are good. Okay, it means all are good. It means if you are not losing money, it is a good thing for you, because when you enter the market, either you make money, you break even, or you lose money. So the two first are good. Break even is good because you don't lose. Okay, although you don't make money, but it's okay. You can buy another stock and you can make money. But when you have a good winner or excellent winner, this will make a lot of money into your account. Okay, so this is just ideas that I'm trying to explain to you to show you that the winners and their profits are not the same. It means they can be big, they can be small, they can be and this, if those guys who are doing day trading like for futures, they will know this, that from 5,000 or 2,000 or 3,000 he buy a future contract. This 5,000 can go to $50,000 or $80,000 if they follow the trend and it's good. Okay, now let's go to number 4. Okay, number 4 is time versus profits. Okay, time versus profits, this is a fact in the market. It means it is not really the time that make the profits. It doesn't mean if you stay 6 months in a trade, you are making better than someone who has stayed 2 days. I will tell you why. This has to do with the stock itself, how fast it is. Okay, one time, like an exception, I'm telling you an exception. Let's say I bought a stock called ANAC, and this company, I think it was bought with another company and it doesn't exist anymore in the stock market. I have made a video and I showed the chart when I get this gap up. $78, and then the next day, $135. Now, I double my money in just 2 days. I just bought at the end of the day. Tomorrow in the morning, it's $135. I sold it. So, making money has not really the time that shows you. It means if you stay more, you will get more. This is not true. But in other words, you should continue when the stock continues to give you money. But it doesn't mean that if you stay 1 year, for example, you will be making more than someone who stays 1 month. No, this is, forget about it. The reason for that is that the stock itself depends on who are buying, and people, when they see something successful, they come at the end, and you see the stock continues to go up, until all the people have bought in a few months or 6 months or 7 months or 8 months, and then some people begin to sell, and then you will see that the stock will be going down. If you don't sell with them, you will lose a lot of your profits. Okay, so understand that a time that you use in your trading or following the trend is just a vehicle of making money, but you don't know how much money you make when you stay a given date, like when you stay 1 week or 2 weeks or 3 weeks. Okay, some stocks, they go so fast, they can double in each day, in 2 days or 3 days or 4 days or 5 days. The market gives you everything, so you just try not to exit very quick and to think that 10% or 5% is money. And you begin, because when you see 5% or 10% is money, you will never see this 100 or 200% because you don't stay. That's why some people, they say to me, okay, I sometimes make money, I lose, but I always break even. I don't see the money. I say, it's just because there are some problems in the way you trade. You exit so quick because the people, they have never seen $500 or $1,000 or $2,000 in a small account. Okay, I'm not speaking about a bigger account. I'm speaking about, let's say, 5,000 or 7,000 account, and they have never seen 1,000 or 2,000 or 3,000 in a trade. This is just because they exit early, okay, and they are scared of the market. And this is a problem that I mentioned in training level 17, how to fix your trading problems. Okay, so let's go to number 5. Okay, it's number 5. Let's see. Number 5 is losers' losses. We'll try to explain this. And what does it mean, losers' losses? Okay. Now, understand, a lot of people, they do this mistake when they do stop loss. Let's say someone tells them, oh, just go and do 2%. A stupid thing on how to deal with something which is so important in trading stocks, which is a stop loss. Where to put your stop loss? It's not easy. It's a complex thing, but some traders, some gurus, they make it so easy. Oh, just use 2%. Okay? So, what is the problem? You will see that if you are trading smaller stocks, you will see that whenever you buy a stock, you exit it. You buy a stock, you exit it. You buy, and you find a lot of losers. This problem is that because first you have no idea about how to handle the stop loss. The second thing, you can't have the same amount of stop loss, the same as percentage. Okay, let's say you say, oh, I don't exceed $100 loss, depending on your account or what you do. But this is false, because when you limit for each trade, you have done a mistake. This mistake, you will see it in exiting the trades frequently. Stocks are not the same. Even if they have the same price, they are not the same in terms of how fast they move, and if there is a big guy or big guys who are manipulating these stocks, so they are not, it's not the same. So in a normal account, expect to see some losses that are different, but the main thing that I mention here, because it is a fact, is that you should not have what we call big losses. Big losses, it means either you don't use stop loss, or second thing, you use a tight stop, you use a stop loss that it is too large and you don't calculate anything. Okay, you put, for example, you see a stock, oh, you see this is a volatile stock, oh, I put stop loss at 20% or 30% or 50%. You see the stock and you try to play as if the stop loss is you want the stock doesn't go to your stop loss. This is false idea. False idea about the use of stop loss. We use the stop loss just to understand how much we risk in the market. It's not because this stop loss is not triggered. Okay? Sometimes, even for me, I put stop loss. It is triggered. Okay? Then I wait 1 day or 2 or 3. I see the stock. If it's going up, I will buy it again. Because stop loss is just to see how much you can handle as a risk. And you say to me, some because they don't know how to use the stop loss or how to the usage, and they say if we don't put stop loss, it's better. Okay. Now, what if there is a problem in the company or the stock or the bad news the whole day, and you lose 20%, 50%? What do you think about that? You can't go back and put stop loss because it's over. When your money is taken from your stock, it's over for you. When you get this loss, which is a big loss, it will impact your account for the whole year. That's why I told you, don't wipe out your account by yourself. Okay? Don't do that. Another thing is that some people, I have 2 weeks ago, he bought an ETF, which is exchange traded fund, and this ETF is about futures. He doesn't know even how this ETF, what it tracks in real, because an ETF tracks something, an asset. It could be futures, it could be stocks, it could be index, it could be bonds, it could be anything. But he doesn't know. He lost 90% of his account because he put all his money, and then the next day he finds only 10%, which is left. And he told me, what's going on? I say, show me what you bought. And when I look at it, I just check it online, and I find this ETF is about futures. I say, man, futures is so dangerous thing for beginners, because the stock can go up very, very high. It can go very, very down, these contracts. So don't play with things that you don't understand. So from now on, if you buy an ETF, you will find it written at the end of the stock. You find it's an ETF. It shows you what it tracks, but you can go online and check and read what's this ETF tracks, and is it a normal ETF, or is it within X? Sometimes you find X, X1, X2, X3, and there are some that are so bad. Okay? So the losses could be different, which is normal. This is a fact. You lose, for example, 100 here, you lose 200 here, you lose 150 here, you lose $50 here. Okay? Yeah, this is normal. But if you lose 100 in this stock, next stock you lose 1500. This is not normal. This, you are doing big mistakes. And if you are continue to do big mistakes, you have no future in the stock market. Your account will be wiped out because of these simple things that I am speaking about. Okay? So let's go to the last one. The last one is solo stocks behavior. So solo stocks behavior is, well, what do we mean by that? We mean that sometimes a stock, you buy this stock, for example, you buy it, it goes into a very, very long trend with no volatility. It means it doesn't go up and down very, very like a penny stock. Okay, it goes 10% up and 2 days it goes 20% down. No, it goes only with like let's say 2%, 1%, 3%, 5%, and it's going up. It could take 6 months and you see this trend. You will never believe that there is a stock like this. This is what we call solo stocks behavior. Some stocks are doing so good that you don't imagine that. Just like 3 weeks or 4 weeks ago, someone has bought a stock at, I think, $36. Okay, it goes to 250 in 9 months or 10 months or 11 months, as I remember. But when I see the stock, it was so perfect. It means if you it doesn't go down like the other stocks, which is swinging a lot, but it just go into a perfect trend. So try to focus on stocks. Don't focus a lot on the market, because most of the people who rely on the market, and it's the stocks, the well-known stocks, you will have always problems. Sometimes they follow the index and it's not good, but there are some exceptions. Now these stocks, you can find them everywhere, but the problem, you don't know where they are. It's like when you go to a land where there is gold and you find nuggets. You can see them in YouTube, you'll find them. Okay, so these places where you find nuggets, you don't find just a small piece of gold or something like that, but you find nuggets that are so expensive. It means when you sell it. So this is the same as the stocks. Some stocks you just buy and you don't have it follow your rules, which is okay, or the criteria that you set. Okay, but if you get a winner like this, you put $5,000 or $10,000, depending on how much your account, and this stock doubled 100% or 150 or 200%. This will be a bigger winner for you in that year, and it will cover all your losses, and you will have a very, very high percentage. Okay, but how do you get those? You should use, for example, my criteria, or if you have other criteria, and just follow the trend. Okay, but if this stock changes the mood and it's going down, and you see that you are losing a lot of profits, so there are some techniques to do that, and you just exit them. Okay, so these are 6 facts about probabilities. And when we speak probabilities, it is the way things go in the market and how we can make money from them. Okay, it's not when we say probabilities, we are thinking about those guys who are mathematician or they are genius in math. Most of the genius on math, they don't like the stock market. Do you know why? Because it is the crowd, the illogical people who are buying. It means they have no logic. You see, for example, a stock, it is $1 in, I have seen before a stock that it is 95 cents. it goes to $40 in 1 month. It goes like this, going up and up and up and up into a trend, and 1 month, it's from 95 cents, it goes to $40. So if you ask the logic, if you come to someone who is a mathematician and he will try to think about it, he will not think about it, because he will never, by his calculations, he will go to S&P 500 and he will say, okay, S&P 500, they say it's 7%, and he begins his calculations about 7%, and he put all his money in the index, and he will make money, and that's it, as they told him. Okay? This is when the people are interested in what we call interest rate. They don't want to bother themselves because they have too much money. There are some people who have too much money and they don't like really the stock market. That's why they want interest rate. Like when you go to a bank and you want to buy a home, from where this money comes? It comes from everywhere, from the Federal Reserve and from the people who put money and they don't use it. So the bank will take this money for free, and it sells this money and it gets profit, like percentage. Okay? So thank you very much for watching. Please, as I state 6 facts, please, if you have more facts about probabilities, please comment here. Send me an email if it is something private, and hope to see you tomorrow if God wills. Thank you.